Okay. Welcome back to our walkthrough. You haven't seen the packages. Now it's time to tackle the rule that can make or break your account. The daily loss limit. Stay tuned. This one separates the pro from the panic. Getting funded feels amazing. Let's stay funded. That's a real win. And the number one reason account gets shut down. One thing daily loss.
Yes, the infamous daily loss. Most traders think they understand it until it closes their account mid-trade on a Tuesday afternoon classic.
But here's the silver lining: when you really swap it, and this rule become one of your best allies in risk management. Today we break it down step by step with real example.
So what is it? The daily loss limit, also called maximum daily loss, set a hard cap for losses in a single trading day, including both low and floating trades. Hit it even for a second and your account shut down automatically.
And here's the nuance. It's always calculated from the higher of your starting balance or equity. That small detail is what catches so many traders off guard.
And think of it, safety less. It's not there to punish you, it's there to keep you in the game.
Like a practical, day 5 your balance is 105,000, but equity is 107,000, tied to some floating profit.
With a 4% daily loss, the system calculates from 107,000 the highest number.
4% of $107,000 is about $4,280. Your equity can drop below $102,720 that day, or it's auto liquidation.
And here the kicker, this is real time. The system doesn't wait, dip below for even a second, and boom, account close.
Now flip it. Day 7 balance is $100,000. Equity is $99,000 because some trades are in loss.
Similarly, higher 4% daily loss is 4,000. Your equity must below 96,000 all days.
Go up to 95,999 after liquidation trigger. No margin call, no warning, just done.
The system executes a market order to close everything. All trades liquidated, account disabled. You cannot trade again unless you purchase a new package.
And remember, because it is queued in at the line market price, slipback can make the final P&L worse than expected. That 3,900 loss you plan could into the 4,200 in second.
That's why we always say, don't dance on gas, respect the limit, protect your capital, and you will stay funded longer and grow consistently.
Alright traders, let's dive into how to avoid violating the daily loss rule. This is where the broke mindset kicks in.
Tip 1. Know your buffer. Don't plan trader that put you right to the edge of your limit. Leave 10 to 50% cushion below your max, especially in volatile market.
Tip 2. Focus on equity, not just balance. Most traders stare at their balance all day, but if loading losses are dragging your equity down, you're already at risk of a violation.
Tip 3. Use the dashboard. We don't trade the full live risk dashboard. Check your loss status frequently. Don't rely on memory or guesswork.
Tip 4. Pro after early loss. If you lost 3% in the first hour of the London session, stop, reflect. Don't try to revert trade back into the green.
Tip 5. Trade smaller during news events. Trade gold during NFP at full side. That's a fast track of hitting daily loss. Scale down your loss right the post volatility more safely.
Let's talk about the trap. What's missing to trader makes more often with today loss?
Number 1. Over leveraging opening trader that are 5 to 7% of your account thinking they exit quickly. When it gone red fast, it's already too late.
Number 2. Holding overnight without tracking exposure. 3 trades left overnight wake up to a 60 pip gap. The loss can trigger before you even open your eyes.
And the third big mistake.
Assuming only long trader matter, not equity include floating P&L too, that your risk score. I always tell new trader that the loss isn't your enemy. Think of it as your account error. It is designed to stop you from making irreversible mistakes.
Exactly, it forces discipline. You can be aggressive, but only inside the box. Learn that and you'll last longer than 90% of the market.
One last word isn't about rules, it's about trust. You need to trade when you recovery. Trust you will manage risk responsibly. The daily loss is loaded than true for both sides. And now we have covered the daily loss rule, your day-to-day signal. Now it's time to talk about the ultimate rivalry. I'm talking about the maximum loss. Your account error isn't just for one day, but for the entire life of your account.
A lot of traders thinking I didn't hit my daily limit so I'm fine. But a few days of small losses up and suddenly liquidation.
Exactly, the max loss is the final safety net. Hit it and the system sees your account as unsalvageable. Immediate closure, no exception.
And let's break down simply. If the total loss your account can sustain across all trades at any moment, if your equity including open trades dips below that threshold, the account is gone, period.
Unlike the daily loss, with reset each day, this accumulate loss 2% one day, 3% the next, and cross the line. That's it.
The actual percentage depends on your package, typically 6% or 10% of your starting balance. It's always based on your initial capital, not your equity or profit.
Suppose your account starts at with a $50,000 with a 6% market loss that is $3,000.
And your equity can never fall below 47,000. Doesn't matter if you make 1,000 yesterday, it accumulates from the start.
And remember, both close and floating losses count. Close $2,000, floating $1,200. Equity is $46,800. Below $47,000, account closed.
Not about next gain or loss at all trades. It's about real-time equity with software floor.
And say your account will to 51,000 profit, feel great, right?
Yeah, but max loss is still based on the original $50,000. 6% limit is equal to $47,000. Profit only gives an extra buffer.
Exactly, your equity can drop on $4,000 before hitting the floor if it doesn't move the threshold.
What happens when you break it? Drop below the max loss even by a few dollars and auto liquidation triggers instantly. All trades close at market price.
And the loss limit may make your final number slightly worse. That's your market reality.
And more importantly, once breach account is permanently disabled. No reason, no robots. Want to continue trading, you must purchase a new package.
Alright traders, here are the secret sauce. How do you stay inside the max loss box and trade like a pro without sweating every second?
Tip 1. Know your floor. Always track your total close loss every day. Don't wait to double unless calculate manually, one less and half the battle.
Tip 2. Treat profits as armor, not ammo. Floating against don't mean going wide. Reduce lot sizes when you are ahead. Protect your capital, don't gamble it.
Tip 3. Money of floating losses liable. Even one growth trade can turn your regression into catastrophes. Stay alert, strategically.
Tip 4. Step back when danger looms. If you find down on the 6% mark loss, don't chase it. Work away, take break, and analyze currency safe account.
And tip 5. Never fight volatility blindfolded. Big news reduce cycle. Nasdaq Euro pair. They spike fast. Respect the market. Respect the limit.
Now let's say well, here are the rules that destroy account harder than you can believe.
Tip 1. Over leveraging opening position that 5 to 7% of your account thinking if say one wrong move and you trap.
Number 2, ignoring floating trades. Close 3 loser. Think you're safe. One more red trade floating $1,500 to $2,000. Boom, the account crossed the line.
Number 3, revenge trading lost yesterday, come back swing today to recover. That how a 6% mark loss disappear into session.
Number 4, sleeping during news. High stop doesn't matter. A single candle can wash out your buffer before you can go in.
And listen up, the mark loss is the enemy, it's your protected self, your airbag. Every top trader I know treat it as non-negotiable crosses, and the lesson is hard, account gone.
Exactly, think of it as a reality check. If you're constantly skimming the edge, the problem isn't the rule, it's your strategy or mindset. Fix that in the account last years, not days.
So here the mantra trader, respect your market. Trade inside the wall will take your equity, grow consistently. Just it like your best friend, and it will keep your account alive while no traders sell to them around you.
At WeMasterTrade, we're not just handing out capital, we build it, structure, discrete line, and professional knowledge. The market loss rule that the line that separate gambler from true trader.
So let's look at the trader here. What you need to remember about market loss. It's a percentage of your starting balance, usually 6% or 10%. It's calculated from real-time equity, not just your balance. It covers both flow and floating losses. Every penny matters. And here are the kickers. One is breach, account is gone permanently.
Think of it as your final safety net. Respect the trade smart and you'll survive where most traders fail.
And we have covered the daily loss limit, market loss rule, your capital setting up. Now let's talk about the results, not just risk. As WeMasterTrade, we want to see the trader grow, scale, and earn substantially. That's where the profit efficiency come in.
This rules are for located by from true prop. It tells us whether you can make consistent profit over time instead of relying on one big win.
And it's also how we determine profit sharing, withdrawals, and scales up. For the and can't withdraw at full profit, this rule is probably why.
Simply put, the profit efficiency ratio measures how evenly your profit come in day to day. One huge spike and several flat or losing day. High ratio, low efficiency.
At WeMasterTrade, most accounts require 30% BC, and meaning your bet they cannot exceed 30% of your total profit, exception the 5-10 no BC brackets, no BC rule at all.
Important, if your BC exceeds 20%, your profit share drops to 10%. That's right, keep your consistency in track if you want to maximize earning. And the formula is simple. The best trading day profit is divided to total close profit and multiplied to $100. 100 will equal to profit consistency ratio.
Best day equal to single day highest close profit. Total profit equal to sum of all close profit minus close losses. Floating losses don't count until close.
So if the bad day is $200 and your total profit is $500, your profit efficiency is 200 divided 500 multiply 100 equal to 40%. That's too high, and you need to trade more to reduce this ratio below 20% to eligible for payout.
In example 5-day result, day 1 is $100, day 2 is $200, day 3 is minus $50, day 4 is $100, and day 5 is $60.
Total net profit equal to 100 plus 200 minus 50 plus 100 plus 60 equal to 410.
The better is day 2 and is $200. The BC will be 200 divided 410 multiplied 100 equal to 48.78%.
Way above 30% limit, even though profitable. Profit share drops to 10% until consistency improves.
doesn't equal price, even profitable trader won't. That full profit share is then to concentrate and coming under.
So, hello everyone, and I will walk you through today's key economic events, and we got important release from Euro, GBP, CAD, USD, and even CNY. So expect the volatility across forex index and gold later today.
That's right, the focus will be on ECB data and especially during the European session, followed by the high impact USD and CAD number in the US session. Let's break it down.
At 15:30, Christine Lagarde, President of European Central Bank, is scheduled to speak. Her comments can strongly influence euro, especially if she hints at future rate policy direction. At 16, we have two key euro data release, that is entry money supply year on year 2.9% versus 2.8% forecast, and private loans year on year is 3.1% versus 3% forecast. Both numbers came in slightly better than expected, indicating steady liquidity growth and continued lending activity in the euro zone. We also have clear Lombardelli MPC members speaking for GBP. Italian 10-year bond auction results showing yields around 3.44 with solid demand. China's foreign direct investment at minus 9.5%, showing continued weakness in foreign capital inflows.
Stronger entry and private loans data are mainly bullish for EUR. If Lagarde sell hawkish, EUR could strengthen further. A stronger EUR may apply from some pressure on USD, which could offer short-term spot for gold during European session. However, bound action ratio and central bank's picture can cause sudden spike, so risk management is key.
At 2030, we have major North American release. CAD current account minus 8.2 billion versus minus 9.7 billion forecast. This is better than expected, suggesting a narrower deficit was potentially supported for CAD. USD unemployment claims is 217,000 versus 206,000 forecast, slightly higher than expected, which may indicate mild softening in the US labor market. And for later, Michelle Bowman, FOMC members speak at 22. Natural gas storage is minus 36 billion versus minus 144 billion forecast, a much smaller draw than expected, which could pressure natural gas prices.
Higher unemployment claim can slightly weaken USD if traders interpret it allow a labor market cooling. If Bowman delivers caution or dovish remark, USD could see additional downside pressure, which would be supportive for growth. And on the CAD side, better current account data could strengthen CAD, potentially pushing USD CAD lower.
And what to watch today? ECB tone from Lagarde, Euro reaction to money supply and low growth, US unemployment claim volatility, Bowman's speech impact on USD, CAD reaction to current account. Today is speech heavy with moderate to high impact data. Expect volatility spikes during both the European and US session.
And trade manage your risk carefully and watch through key level. See you again next updates.
Thank you so much to all amazing viewers who trust our live stream today. We truly appreciate your time and support. We hope the live session have helped you get a better understanding of our company. Stay tuned for our next live stream. Can't wait to see you again and bring you even more helpful update and insight. Happy trading!